10. Thanks for tuning in. I am right here in Gatlinburg, Tennessee, at an incredible cabin. So, having some family time, but wanted to make sure to get this out to you guys to do because I do have a few things I want to cover. So, thanks for tuning in from wherever you are. Drop a note, say where you're calling or where you're tuning in from, rather. You can hear the thunder in the background. All right. So, a couple things. Right now, the big news is the Fed. And you've got sort of a split between Jay Powell, who's obviously the Fed chairman, as to what to keep doing, and some of the other Fed uh, heads. So, what you've got is Jay Powell saying, hey, we need to continue to raise rates and probably going to raise rates again, short term rates. So, if you've got a home equity line of credit, if you've got a loan that's a building line, credit card, anything like that, it's probably going to go up again in July. Then they may pause. Then he's talked about having uh, another raise in rates. So he just feels like inflation is not coming down enough, that it's not coming down fast enough. And so again, guys, they're likely. This is my opinion, but this is what their history has been. Just like they went too long, too far on lowering rates. Now it's overkill, and they're going to go too far for too long on this side of it, which has just been the pattern for this chair. But something has to break, right? Something has to break for inflation to get to 2%. But what will it be? Will it be the job market, housing? What's responsible for keeping inflation high? We do know that rents and housing is doing that, but we also have the problem of low inventory and this massive problem of a shortage of inventory for the last several years. And that's the reason why builders are raking it in right now, because they can't keep up and people need homes. So you have this is really simplified. You have this many people needing homes. You have this many homes. Again, this many people need homes. You have this many homes. That is a problem that we just can't seem to fix, and we're not going to be able to fix in any short term. Now, there's all the crash bros out there, Burley and all these guys that promote this crash, and it's all for clicks. So where's the crash? Where is it? Can someone please tell me? Because I'm just not seeing it, and there does not seem to be any sort of crash or decline on the horizon. There's too many people at the front door needing to get into the house, right? So here's a cool thing I want to segue over to. The Fed does these each year. They do a stress test. So a lot of the topic right now for you guys out there is bank failures. Hey, is my bank going to fail, or more banks going to fail? What's going to happen? Well, the nation's largest banks underwent what's called a hypothetical stress test scenario, which consisted of $541 billion in projected losses. And this is done, the Federal Reserve puts these, all 23 banks that remain above minimum capital requirement after this exam. Now, let me explain kind of what this exam consisted of. So they tested a 40% decline in commercial real estate prices. Why? Because, as you guys have been maybe listening to, right now, commercial real estate, because of office space from home, you've got a problem with commercial real estate vacancies, and also all these notes coming due where people did the dual rate, or the notes coming due in the next 2 years on a commercial loan, guys, on a commercial loan. And now the rate's going to be much higher when it go to or to renew notes, right? That's going to be a problem. So they're trying to stress test against that. The thing that they did, they they did a substantial of office vacancies, of about a 38% drop in housing value. So they're even not projecting, but they tested against like a worst case scenario of a 38% housing drop, and the banks still weathered that. So that's good news in my opinion. So I think we should be able to rest, because I do not think that even the things that they stressed it against are not going to occur. Some of them may. You're certainly going to have problems in commercial housing, or sorry, commercial real estate right now. I'm involved in commercial real estate. I'm an investor. I know these are types of things that are on everyone's minds. All right, what else do we got? Zillow, they're shutting down their closing services unit. At the end of the day, Zillow, their whole venture into the world of real estate, financing and mortgage and trying to take over, it just did not really play out like they had thought. So I want to hear from you guys. What's on your mind? What's bothering you? What are you concerned about? I'm here for you. Keep in mind, when you are, a couple of things I want to mention that I've seen come up lately. If you're a business owner, you're in the middle of a transaction, you do not want to go take out additional lines in the middle of one transaction and not tell the other lender. That's going to create a problem. It's going to put a stop to the loan. The other big thing is right now, if you're in the middle of a transaction and you have already been approved and you are not, and you have had your tax returns already reviewed for 20 and 21, but you haven't done your 2022, you need to talk to your lender. Don't be in a rush to go file 2022 when they've already approved you with 2021 and 2020, and you've got the extension. Because once you go file them, if it's worse or if you owe money, now that's got to come into play. So just a tidbit. If that doesn't make sense, feel free to shoot me a DM. But I appreciate you guys being on. I appreciate you listening, and thanks for tuning in wherever you are. And I'll talk to you soon. I'll see you next week. See you guys.